Welcome to Business with Beers. I am your host, Brian Beers. This is a podcast for entrepreneurs who want to learn how to build and manage their wealth like they manage their business. My goal with every episode is to inspire you through the stories of my guests. This week, I've got Rob Coldwell, who is an entrepreneur in the property management space and a real estate investor. In this episode, Rob shares his journey from starting a property management company from scratch to now managing over 2,000 units in 4 markets. He also has some great advice on questions you can ask a property manager when you are vetting them, looking for a new partner. But before we dive in, I want to tell you about an extraordinary offer from a company that I currently use called MyOutDesk. MyOutDesk offers professional virtual assistant services, and they happen to be rated the #1 virtual assistant company by Tech Radar with over 700 5-star reviews. I've got friends and associates that are among the thousands of very satisfied customers. I get a lot of listeners ask questions of how do I scale while lowering my costs? And I use MyOutDesk and save 70% versus a traditional in-person hire. For Business with Beers listeners, MyOutDesk is offering a free double your business strategy session. Simply go to myoutdesk.com/beers, as in my last name, to schedule a call. On this call, you can work one-on-one with one of their business consultants to design an action strategy to hire and launch a virtual assistant into your business today. If you'd like to learn more about the topics covered in the podcast, you can check out brianbeers.com to sign up for my free newsletter, delivering content directly to your inbox. Welcome to the show, Rob.
Great to be here.
Awesome. Well, this wouldn't be Business with Beers if I didn't ask you. Me and you were at a bar on this lovely day in Pennsylvania. What would we be drinking?
Well, 10 years ago, I would have told you it would probably been an Irish car bomb.
Okay.
But in about half a decade, I haven't had any alcohol. So it might need to be a virgin mojito for me, but
awesome.
Hopefully half your listeners didn't tune out.
No, it's all good. So if you could you share kind of your story and your journey kind of from, 18 years old to kind of where we're at today. And then we'll go from there.
Yeah, 18. I had those first Irish car bombs, fell in love. Let's say I was 18. You're graduating high school. I'm going to Penn State. I had a small landscaping business. A couple years into Penn State, I was running out of money. I had sold my landscaping business, and a buddy of mine that I had met with to start a company that we would call transformation services. And he was working for a company called Swiss Farms, this drive-through grocery store in Delaware County. And there was like a switch that went off in my mind. And I just became fascinated with this idea I thought about the McDonald's model of buying the real estate and then putting your restaurant on it. In this case, a drive-through grocery store. So that was the next almost 10 years of my life, Brian, as I lived and breathed Swiss Farms, drive-through grocery store. I graduated college early, went to work directly with the company. The company had just been bought by private equity, and I learned the operations, and then I helped to franchise the business model. The challenge is that the numbers didn't make sense. The unit economics of that franchise didn't work for the cost of real estate and the cost of construction, and there was margin pressure on the products themselves. Supermarkets are historically known for lower margins. Once you get into the prepared foods and things like that, the margins go up. So my cheese moved. I took a pay cut, which I didn't like. And I had to find a new business. And I was in the franchise space. Long story short, I wanted to find a business that did well regardless of the economy. I wanted to find a business that couldn't be completely outsourced, one that would actually have EBITDA, right? Earnings before taxes, interest. And I wanted to be in the service sector.
Okay.
So it was between hair salons or property management.
Okay.
That's how it went down. And then the next part of that journey was I'll buy a property management franchise.
Okay.
Ended up not buying a franchise, but started one. And that ultimately became Rentwell. Rentwell became a service company, and a service company became an investment company.
Okay. Good. So you start what year? How long ago did you start Rentwell?
We started as your local leasing company in the summer of 2009. Okay. 3 partners, myself, my wife, and a guy named Joe Cirillo, really good property manager, burned out from the business, who was the broker of record.
Okay.
So he didn't want to place tenant. He didn't want to collect rents or coordinate maintenance. Hence, he called it your local leasing company. So I partnered with him. My wife was the first employee. We would bring our call center at the time on vacation with us. Still did a lot of ads on Craigslist. We had an office in Collingdale. We would physically print out our rentals and have them outside for people to take a sheet. And that's what we did. And I learned from him how to place tenants.
Okay.
My experience with real estate was I bought properties in 2004 and 2005 in Westchester. So managing young professionals in like rooming type houses in Westchester, I think similar to we were just talking about your Conshohocken property where you have a group of young professionals. That's a lot different than managing $900 to $1,200 a month, 3-bedroom, 1-baths.
Mm-hmm.
So that's where I learned. And that was the summer of 2009.
Okay. So you start that, it's a property management company. And then when did you start adding services? So now, and I assume you mean you're not hiring landscapers and plumbers and contractors. They work for you, right? And it's your company because there's a profit center there, is convenience, better management, right? Walk us through kind of that evolution.
Sure. So the challenge with a property management company, after you figure out how to place tenants, and then you figure out how to handle the opposite side, the eviction side, then you figure out how to handle all of the accounting and reporting. Like a lot of that is scalable, right? You can read the E-Myth or any number of these books. Like that's all scalable stuff. The challenging part of that is, as the manager, you're naturally in the middle of a landlord and a tenant. So I know you're in the automotive space, right? Mm-hmm. The equivalent that we use is when the owner is frustrated with us that we're telling them that they need new brakes. And the tenant wants the best brakes that they could possibly get. The owner's paying the bill and we're right in the middle. So there's this unalignment on maintenance. Maintenance is the hardest part of property management, assuming you do everything else well, which is actually quite scalable in today's day and age with the software. So this is our third, I don't want to say this is our third attempt. It's our third and final. This time it's stuck. We invested about $500,000 at the beginning of the pandemic to first, it was just a couple $100 to bring the landscaping in-house. So now I'm at it's 2021. I'm at the beginning of 2020 and the world's shut down, can't get construction permits. We relied on one vendor to do our landscaping, snow removal, HVAC services, handyman services, unit turns. So we had a management company and we outsourced to like one main company plus some others about $2 million worth a year worth of services. When it would go well, it would go great. When it wouldn't go well, things like we're not getting to your grass cut, or we don't have pictures of snow removal, or there's a leak that's been going on and we thought it was resolved and maybe it was, but the inside hasn't been done yet. So the bottom line is that maintenance is the crux of property management. Mm-hmm. And we started with myself and a little gold pickup truck, little Toyota Tacoma. And my wife thought I lost my mind. I grabbed a friend and we started cutting like 50 lawns a week. Now we're in like May of 2020 and I'm actually having fun. I'm like, there's nobody on the roads because we're shut down. I can't get my construction permits because we were starting to do real estate development at that point in time. And I'm getting out to see all my properties, stuff that I'd never seen before. And when I say my properties, I mean the collective of Rentwells. And that has grown into a little over $2 million RW services business, where we went from landscaping and then we took our construction projects back. We then got into HVAC tune-ups and installs, daily maintenance, and unit turns. Okay. So it's been relatively new. It's about 18 months. We had 2 prior attempts and didn't have the right mix, didn't stay close enough to it. I thought I could just hire somebody and here's all these accounts and run it well. So learned a lot over those years. It's going very well. And what's happened is, and you said it, we're running a better management company because we do our services more in-house. We still need to outsource. If you have a management company that's telling you they do everything in-house, it's not physically possible because of the ebb and flow of the space. So probably what they've set up is a shell company that they process all their invoices through. And they invoice you as if they're doing everything, but they're really subbing everything out. I have some friends in the space who they don't employ a single W-2 to do maintenance work, but they act as if they do. And that doesn't go along with our Rentwell values of honesty and integrity.
Okay. So how big is the company now? How many properties, how many employees?
So as of the date of this recording, we are just under 2,000 rental units. It's about $250 million that we manage for other people. We're in Pittsburgh, Wilmington, Delaware, Baltimore, Maryland, and the Philadelphia region. We have 52 employees and partners. It's set up like a license structure. So there's an entity that holds the license and also operates all of our centralized services like a call center or an accounting hub, research and development, training, HR, things of that nature. And we have licensees in those 3 other markets outside of Philadelphia. And the service sector accounts for some of those employees of the 52. That has about 18 individuals, W-2, operations staff, and the technicians that work. About 50% of their work is on our own construction projects. Okay. So we do big burr models with small apartment buildings, 5 to 20 units.
On your investor, on your own property. So you manage about 2,000 units. You said Pittsburgh, Wilmington, Baltimore, and the Philadelphia suburbs?
Yes.
Okay. How Pittsburgh and Baltimore? Why those markets?
Yeah. So Pittsburgh used to be our broker of record here in Philadelphia.
Okay. That guy you mentioned. Okay.
Different partner.
Okay.
Different partner. And we switched the name when we opened up in Pittsburgh because your local leasing company wasn't trademarkable and it's not very catchy. People would just abbreviate it to YOLO most of the time. And I don't blame them. So we found Rentwell, paid good money for that domain. And then our existing broker of record really loved our business model, liked us as partners. He went out to Pittsburgh. We found another company for sale out there through a close friend who you actually just interviewed more recently, Mike McCarthy. And that was our start in Pittsburgh. And then through the mastermind group, Go Abundance, when I was a member back in like 2014, 15, 16, a lot of those members have real estate brokerages, and the property management was the hardest part for, I should say, that world of real estate for them. So we began bolting on Rentwells to their brokerage. It didn't turn out how I thought it was going to happen. So we've actually we've scaled back since then and focused more on our core markets, which are those 4 core markets. And then we added on the services side, and simultaneously in between them, we had done our own investment side. So my partner and I have about $10 million worth of holdings that Rentwell manages. So I'm the hardest client they say that they have.
Yep. So
my goal is to get.
And how many units is that?
That's 65 doors.
65. And those are, I think as you mentioned a little bit earlier, most of those are going to be 5 to 10 unit apartment buildings, mainly in the Philadelphia suburbs.
Yes. That
you're doing big. Talk about some of these. They're big bird deals, right? These are ones you're doing total renovations on. Total renovations.
100. We give it 100 amps of power. So we're running new service lines up to each apartment. We're putting in central air. We're leveling floors. We're putting in soundproofing in most of the bedrooms. We are. Yeah, of course, full paint, kitchens, bathrooms. We can invest anywhere from, on the low side, about $30,000 an apartment, to a high side of 80 to 90 on these apartments.
And for you personally, you've got this kind of strategic advantage because they're your employees. Like your cost to do it is kind of less than somebody else hiring the contractors, right? Because they're already in house, already in the team. Like a lot of it, the overhead is probably covered.
I save about 10% as a GC fee.
Okay.
So They're on W-2. So it's a little misleading, right? Because all of my employees, we have workers' comp, healthcare, payroll taxes, COVID pay. We are true costs we're fully labored in there. Whereas some of the other investors they're not. Their crews aren't workers' comp. They don't have payroll taxes. They're buying stuff in Delaware tax free and bringing it up to Pennsylvania. So what we say, Ryan, is in speed and quality. Okay. The price is about what you would expect to pay from a licensed and insured general contractor. We're probably about 10% lower because we can tweak our margins down.
Okay. Yeah. So one of the things I want to talk to you about and kind of get your opinion is, I think for a lot of people, property investors, property management is like one of the biggest limiting factors for people and for investors to grow. Just kind of as you mentioned, like the Keller Williams guys, I assume, that they have people, they're buying these houses and then they get to them and they look great on paper, but then the management's, it's not as easy as pen and paper, right? We got people, we got toilets, we got leaks, right? And then one little issue of a roof could snowball into, a mold, and then a tenant's upset and then they're out of there. And, it's a big deal. So I think for me, that's like, it's easy, I think, to find a property and to buy one, but it's the finding the partner who can manage it and actually act like you're a partner, right? In the deal and not just a company. So I guess for somebody who's not in one of these markets and couldn't hire, maybe your company, how are they going to go about vetting and finding a property management who is going to be a true partner with them in maximizing the value of the place and not just, creating more headaches and discouraging them from investing?
So the question is how to find a good property management partner if you're not going to do it yourself.
Yes.
If you own a rental property and you own it with a partner, first thing you need to do is figure out, of those two partners, who's going to do what. Usually somebody's going to oversee some of the accounting and that and maintenance. What I'm getting at is somebody's going to manage the manager. Yep. And then somebody else is going to be looking at the next deals. Those are two distinct roles. So a lot of our clients, when we look at them, are LLCs with like two or three, an acronym, because they've abbreviated their last names. And they have these partners like BTR or the list could go on, right? Yeah. So what I would look for is I would do the Google. If I was just like new to the area, it would have to be Google. But that's not where most people find their property manager. In fact, we stopped advertising about 7 years ago. Most people find their property manager through word of mouth, through the local real estate clubs. There are some property management firms that are very good with what are called accidental landlords. Accidental landlords, they need to move. It's a home that they lived in, and for years that was like the bread and butter of a lot of management companies. So they would have hundreds of clients with one rental property, and it's high maintenance from a perspective of working with the client, but for the most part, it's not too hard of property management, right? It's one single family home. The tenant's taking care of the lawn, that they're doing snow removal. It's either occupied or vacant and that. So if you have like one property or single family homes, that's going to be a different property manager than the small multifamily. You could probably find a realtor whom wants to build a relationship with you, whose broker allows them to do property management, or a niche firm that is advertising on Google that can do a great job for your single rental property. The challenge isn't always the manager. The challenge is the expectations that the clients have or that the landlords have on what the pro forma is going to be for their building. And I have never to this day, maybe I need to ask a little harder, gotten an owner to send me the budget for their building. What's the pro forma? Right? We were talking about your property. We could probably do that now. You have some track record, you have some QuickBooks. Property managers don't see everything about a building. We don't know what your taxes are. We don't know what your mortgage is. We don't know what your insurance bills are. Those are like some of your three biggest expenses. So we don't always know how well capitalized you are.
Why not? I mean, does the software not allow you to get that input, even if you're not paying the bills, to get a bigger picture of the property like you were the owner?
Yeah. We're just trained so that we don't pay those three things. It's too risky.
You may not pay them.
We don't pay them.
So I understand that, but what about the insight into tracking them? Like your software, you can't input that and get that, track those numbers as well?
There might be a way to do it through like a budget feature, but there would have to be like some journal entries going on.
Okay.
So the point is not a matter of whether or not we could pay it or not. It's a matter of, are the challenges that people experience with their property manager because of expectations that they have with the building versus base reality. So if I was vetting property managers, depending on my asset, I would be, especially on like a small multifamily, I would be asking them lots of questions around how they do some key metrics. And I'll give you the key metrics right now. Because if they know these metrics and they're real, not just some BS that they post on their website from 5 years ago and have the date automatically updated. I'm talking about, do they know economic occupancy? So do they know what the market rent is versus what it was actually rented for, less vacancy and less collections? So if they know that in that county, if they even know by the county that they're operating at, let's say 93% economic occupancy, that would be, I would check the box on that one criteria for that manager.
So that's so just the math. So you take market rent. So at 100%, we were getting like the best dollar for every unit. Then we're actually taking into account. So that's the top, that's the bottom number, right? That'd be 100%. And then the top number would be what the actual rent is. So even though we think we can get $1,400 for this place because we're trying to fill it or whatever, we're getting $1,200, whatever. Yes. And then we're taking the actual rent, that we're subtracting vacancy costs. Yes. So if it's unoccupied, and then we're subtracting collections. All right. Yes. Okay. So at 100%, 10 units, they're $1,000 each at market rent. Our base number would say be $10,000 a month, but because it discounts vacancy and collection, we're at $9,000 a month. Yep. Right.
What did you actually bring in?
But they're actually
on a trailing 12 month.
Okay. And that's economic occupancy. Okay. So knowing for their portfolio what that number is. What's a good number?
Above like 92, 93%, where when you're dealing with single family homes and you're dealing with small multifamily, most managers aren't going to put in market rent versus
actual rent. They're going to say actual is market.
Exactly. So if they're not giving like a couple percentage points off for that, then you should be making money. Like if you only looked at one metric for your property, you would be doing pretty well if you were 95% or more economic occupancy.
Yeah.
Like the manager's doing a great job. Like there's only weeks worth of vacancy, not months.
Yep.
They are people are paying their rent. Maybe they beat you for like a little bit at the very end. The other side of that coin is maintenance costs.
Okay. Yep.
And that is really hard for a property manager to know what their maintenance cost is across their portfolio, because some clients do it themselves. Like that's a big one. So you lose visibility. You might have 2,000 doors or 500 or 200 doors that you manage. Well, not every owner wants to do all the maintenance that might be required. So when we look at maintenance, when I'm running a pro forma on looking at buying a building or working with a new client, I break maintenance into 5 categories. Yeah. And if I was vetting a manager, I would want to understand what these categories might be costing. So one is the seasonal stuff, landscaping and snow.
Yeah.
The other would be daily maintenance. So the toilet backs up, which should be charged to a tenant 9 times out of 10. Faucet, the nuisance type stuff. Some leases would put that on a tenant, others don't.
Yeah, light bulbs, that kind of thing.
Light bulbs, absolutely. Yep. So strong lease. You're going to be better with a real estate investor or developer who's a property manager,
yeah,
then a realtor who's doing it on the side to be able to get more, in theory, commission.
Because they know the business. They've been through, 2,000 units like you guys manage, right? You've seen it all, you know it all, like, you know what the financial cost is. You structure the leases better if you can put things back on the tenants, right?
Right. So the third thing we'll get to maybe after this, if there's time, is I might have seen a lot. I might have known a lot, but how new is the team member that's going to be? Mm-hmm. How much experience does my team have managing their portfolio? Are they're 3 months, or have they been there for 3 years? There's a big difference. So maintenance wise, so we did seasonal, we did daily. Then we do a reserve for unit turns.
Okay.
So it's really nice to know, like, are you thinking on this apartment that we're going to be $3,000 to paint it, clean it, and not going to go much further than that besides some blinds or whatever? Or are you thinking that we're going to open up a wall, upgrade the bathroom and give them their own washer dryer hookup? So that's a big difference. Then of course there's capital expenditures.
Yep. The new roof, right? Yeah. The new heaters, the big stuff. Yep.
Yeah. Yeah. And then we do just special projects that usually fall under CapEx, but now we're getting technical as to what are we going to have to depreciate versus not. So we will do a special project that might be like a one-time that we're going after.
Sectioning off the water, for example, to build tenants individually. I don't know, maybe what type of other things? More things that save
parking lots. I mean, they're usually capital. They're usually CapEx. But I have budgets for different models that would say, what do you need to reserve for the full CapEx over the next 10 years? But then we might be front loading some of that stuff. So it just gives with the bookkeeping some flexibility. So
you're talking to a property
diving
manager.
Into those.
Yep. So you're asking and with the expectation that they should know what these costs are or how they handle these things. And if they don't really have good answers, they're probably not focused on maintenance, which is one of the biggest issues. And if they're not
in control of it.
Right.
Yeah. If they're not in control of maintenance and it's just going to be, well, when there's an issue, we're going to call somebody, then you haven't hired a property manager, you've hired a call center. Mm-hmm. But you're paying 6 to 12%. If you blend in leasing fees and management, maintenance markups, that's another question is, are they going to be transparent on what the invoice is? Like, is it their actual company or are they subbing it out and are they marking it up?
Yep.
So that gets into the transparency on things. I'm fine to pay a property management company to mark up the maintenance if I know what the actual invoice is. Mm-hmm. When the risk is when you don't, and I've had to let an employee go because of this, is they start cutting side deals. The employees themselves will cut side deals with vendors and say, okay, hey, this owner doesn't really pay attention. And let's call that $1,000 bill $1,500 on this one, Bob. And I'll meet you in the parking lot for the extra. Venmo be the $200. Like that. Like that stuff's real. So close metrics, watching these things, very tight accounting. That's the downside of the smaller management companies. They might not be as tight with those things. Usually when I buy a management company, we do buy them from time to time. The accounts are off. They're usually short.
Yeah.
So.
But what about a larger property management company? So that's all small stuff. So you go and find a larger one that has a couple, multiple thousands units. Are there the same questions? Are you looking at a different thing? How would you vet them?
Yeah. So you want to get past, if you can, you get past the sales guy. Find out who you are going to be working with and see how you resonate with that person. Find out how long they've been there. Property management companies, there's only two ways to structure them that I'm aware of. One is department-based, the other is portfolio-based. So portfolio-based is they wear a lot of hats. They're doing some tenant placement, some maintenance coordination. They're going to be the one on the phone answering your questions about these statements and things like that.
Mm-hmm. Yeah, they own it. They own it end to end. The whole everything to do with the property. You're the one guy or girl they call.
Yes.
Okay.
It's very effective, but not very efficient. And you're really at the mercy of that person. How's their mental state that day? How quickly do you need a response? Then you have the department-based side where they have maintenance field staff out in the field doing move out. They're getting reports back. So they're going to be more efficient, but depending on how that management company is structured, it may not be as effective.
Yep.
Then there is the third way. There's the way that we do and a lot of other firms do it, is where you have like a hybrid of sorts where you centralize as much as you can. And then we have fewer people on less properties.
Okay.
So it's more of like a portfolio base, but like a department behind them. So
there might be one point of contact and then it splits from there. Okay. Versus like you got to remember who you call for maintenance or who you call for leasing or who you call for a different thing, right?
Exactly.
Yep. That's good.
Yeah.
What are some of the big goals you're working towards now? Like what's in 3 years, what does Rentwell and your investment portfolio look like?
So we have a 10-year, 9 years left. So we have a $10 million in assets. We can see ourselves being $100 million in assets. We are at $250 million worth of real estate managed. We could see that being $1 billion worth. So we would 4X the management company and 10X the investment company. We want to continue to manage other people's real estate where we can do a good job. Really, I should say a great job. Right now, about 50% of the leads that come in, we make the decision to work with them because we can do a good job based upon the geography and the type of asset. The investment side, I'm curious as to how that's going to grow over the future. I don't know if it's going to be continuing to do these large apartment BRRRR models.
Mm-hmm.
They are increasingly difficult to find. Maybe that's negative head trash that I shouldn't tell the universe, but it sure feels that way. Sometimes I feel like the harder I try to find them, the less I come across. But I love owning real estate. I'm a believer in it. I have 4 little kids. All of our team has fractional ownership. Not all of them, most of them have fractional ownership in our portfolio. So that's interesting. After they've been there for 2 years, they can get 1% ownership in a property's cash flow. So I just want to keep being a good father. And once the bills are paid and there's nice vacations lined up and you can have some fun and you're out of that uncertainty level. It's really about love and relationships, helping other people. And that's what fills my soul.
Yeah, that's great. And, you're a key component of it, right? And real estate can create financial freedom for a lot of people. And said that property management's a key component. Otherwise, they're doing it themselves is one option, right? And then they've bought themselves a job and perhaps traded one job for another job that they don't even like, but they see it as the path. So by solving a problem for people, you're helping other people get that freedom to live their lives. And obviously for you, it's then a matter of building systems and processes in place so that your team can execute the model without you personally being involved. So then you get the freedom, right? Because if it's all dependent on you and Rentwell is you, and that's not scalable for the long term either. So it's a tough business, and it sounds like you guys have done a great job building it up to this point.
Yeah, thank you. Yeah, you make your money when you buy, but you keep it and grow it through good property management, good asset management. I agree with you.
Awesome. Any books you're reading now that you would recommend?
Sure. I just Dan Sullivan, Strategic Coach.
Mm-hmm.
So he wrote a Gap. I think it's called Gap versus the Gain.
Yeah, the Gap in the Gain. Yep.
Gap in the Gain. So that one just arrived not too long ago. I'm enjoying that. That's the one that I'm working on right now. I'm going to reread. It's called The Autobiography of a Yogi. I'm fascinated by.
Okay. I heard of that one. Yeah.
So that's an interesting read.
Okay.
Right there. I
see behind you have What It Takes, which is a great book. It's, Steve Sorcherman.
Yeah. Yep. That one just arrived. That was from the 7 to 8.
Okay. Yep.
Yep. So awesome. That one just arrived. So he's what? Blackstone guy. So
yep. Yeah. His biggest message in that I took out of it was that it takes the same amount of time, effort, and energy to do something small as it does to do something big. And so if you think big, act big, like you will get bigger results and bigger returns rather than thinking small and acting small, which at the end takes the same amount of time. And even for you, you see that in your business, right? You can buy one single house. It takes like, you got to find it, you got to negotiate, you got to underwrite it, you got to manage it, you got to rehab it. Like all those steps are the same, whether it's 1 unit or 5 units or 10 or 50 units, right? But at the end of the day, that the bigger apartment buildings are going to give you more scale, more profitability, bigger return for the same. Like the steps are the same, right? Mm-hmm. Obviously they change, and a lot of it's in our head. Like you said, that the head trash or the risk. Anyway, that was a great book because he talks about raising money and all these big obstacles they overcame. And at the end of the day, it was thinking big and acting big. And that's why they're, one of the biggest in the world now, private equity. So, awesome.
So cool. Read that one next.
That's a great one. Gap in the game is good too. That's a similar too, right? Because the gap's like where you want to be versus where you're at now and thinking you're in the negative because you're not where you want to be. And, if you take those two books and put them side by side, it's like you have this big goal and you want to think big, but then you can't, like you need to drive to that, but stay in the positive, stay in the game to think of how much progress am I making towards this goal, not, oh, I have this big goal and I'm never going to reach it, or I can't reach it because of all these factors. And then you're in the negative again. So yeah, it's that balance, I think, is the biggest part, the biggest challenge is it's what's the balance between those things, having big goals, but then being appreciative for what you got, grateful, and then also motivated to hit them. So anyway, lots of good education. I mean, that's how successful people like yourself continue to learn and apply these things, and you grow.
So, your lips to God's ears, man.
There you go. So where can people connect with you and learn more about Rentwell and everything you're up to?
Yeah, so I'm an old fart, man. I'm pretty much on Facebook. Had a call earlier with somebody on Instagram, and I'm learning that. But right now I'm on Facebook, and I still do emails and text messages. So rentwell.com is our website. Rentwell.com/off market is where you can find out about some of our landlords who are selling and stuff that we come across. And then, you can find me on Facebook, and I'm pretty easy to get a hold of, rob@rentwell.com.
Awesome. Well, I appreciate you coming on and sharing all your knowledge about property management and investing. And you've added a ton of value, and appreciate you.
Oh, man. Thank you, Brian. Appreciate the opportunity.
Yep. Bye.